Hello, everyone. Welcome to video, I think 9. In this video, it's going to be short. Um, I'm just giving a small modification to the charitable donation credit that we talked about in the last video. If we traded shares of public companies or ecologically sensitive land. So let's go straight to that. So if it's just capital property, if I have a machine or an asset that I donate to a charity, I will recognize the recapture and the taxable gain, and then I get the donation tax credit. But if I donate shares, the donor can receive a donation tax credit based on the full fair market value and the capital gain on both gifts of publicly traded securities and ecologically sensitive land is deemed to be nil. So other donations of capital property, we recognize the income and get the comparative donation credit, kind of a balanced transaction. But if we gift shares to a charity, we get the charitable donation, but we don't have to recognize that capital gain. So it's a big I guess, incentive to donate shares to charities. So the problem, any accrued gain at the time option is exercised is treated as employment income. Oh, this is if we have stock options. So stock options, I would include in employment income. The thing about shares is if I recognize that gain, that capital gain, only half of it gets included in income. But if those shares are from stock options, I'm including it all in employment income. But then I do get that 50% deduction if the right situation presents itself. So if I have shares through my stock options, the accrued gain at the time options exercised is treated as employment income. The deduction of half of employment benefit is permitted in computing taxable income. Since the increase in taxable income is not a capital gain, it is not deemed to be nil. So this preferred treatment is specific for capital gains. But this, quote, gain is employment income. So it doesn't qualify to get that treatment. So the solution is they are permitted an additional deduction equal to half of the employment income inclusion. So their usual deduction for stock options takes care of the first half, and then they get an additional deduction to take care of the second half. So what this is doing is functionally the income comes to zero in the same way that the capital gain would be treated as zero for publicly traded shares. So if we got the shares through stock options, yes, we have to recognize the employment income, but we get to double that deduction of half the employment benefit. If the stock option deduction is not available based on restrictions, then stock option deduction also not available. So you only get this additional reduction of half of your employment income if you are also privy to that half of employment benefit. They go together. So donation of publicly listed shares. Mr. Sahid Redeem has employment income of $90,000. He owns shares that are publicly listed on the Toronto Stock Exchange. These shares have a fair market value of $110,000, a cost base of $30,000. In 2024, these shares are donated to a registered Canadian charity. Mr. Redeem has no taxable income deductions. His taxable income is equal to his net income. Assume that 15% of his personal tax credits, other than the donation credit, amounts to $4,000. Determine the maximum donation tax credit, the amount of donation he should claim in order to reduce the payable to nil, and any balance of unused donation moving forward. So this question is very similar to the last exercise. The only thing we're considering is that we don't have to recognize that capital gain or that recapture. So in the question, we only have that employment income of $90,000 to account for. So the fair market value is 110,000. There would be a capital gain on it, but it doesn't have to be recognized. Our employment income of $90,000 would put us into the top two brackets. The first 55,867 would be taxed at 15%. The next amount is taxed at 20.5. So our total taxes payable is 15,377. But our personal tax credits are taking care of $4,000. So we have $11,377 payable before donations. How many donation credits can be used? Our total donations value is $110,000. That's the value of the shares we gave up. But our donation limit says we're restricted to 75% of that net income. We didn't recognize any taxable capital gains, so there's no 25% inclusion. So we don't get that bump in our donation limit. We're still limited to 75%. So we can only claim $67,500. In order to get rid of 11,377, we'll use the first 200 to remove $30, and then the rest of our donation will get rid of the remainder. So our total donation credit needs to equal 11,377. In order to do that, to get this $30, we donate at least 200. To get this 11,347, we claim an additional donation of 30,128. So of our donation of $110,000, we will claim 39,328. That will leave just over 70,000 left to carry forward, and that will take care of our total tax payable. So that is donation of capital property. Like I said, they function very similarly, but for the donation of listed shares, we don't recognize the capital gain, but we don't get that addition to our donation limit. So we have to figure out how much donation do we want to claim to get that payable to zero. There's also additional amounts that we might claim from Canadian cultural property. Proceeds of disposition are deemed to be fair market value of property in all circumstances, but there's no capital gains on donation of this property. So if we're donating something of cultural significance, we don't recognize the capital gains, but if it's resulting in a loss, we get to use the capital loss. So limits on amount claimed is normally 75% of net income, but the overall limit is increased by 25% specific for taxable capital gains and recaptured CCA. So this calculation allows it to stay. So if I donate some cash, that cash limitation, that donation, is still going to be limited to 75%. But if I donate land, that land can be claimed 100% in the year. Or if I donate capital property, I can claim up to 100% of the capital property. So if I donate both cash and property in a given year, my total 75% of net income includes them both, but my donation limit increases specifically from that 25% portion of the income claimed or income recognized from the capital property. So by my donation limit would be 75% of my net income plus the portion of my donation that is capital. The carry forward, any unused donations carry forwards 5 years. Same income-based limits in carry forward years. So we're always applying that 75% limit, and we're always considering the 25% of capital gains and recapture. I think, but given that the capital gains recapture happen in the year of the donation, I think we're limited from that 75% going forward. Okay. Thank you for your time. We've revisited donation credits. In the next video, we will revisit foreign tax credits and just talk about some of the nuances since we visited it in chapter 7. Thank you for your time. See you in the next video.